This conference will now be recorded.
Hello, good afternoon, everyone. So today we will discuss about the income statement. Okay, so in the previous class, what and all we had done, so that is nothing but FV, PV, and all, right? Any doubts in that? You have
No,
practiced,
no doubt.
no doubts, huh? Okay, fine. So, you be practicing all the sums, you have to try it out because all those sums are nothing but like it has been taken from the real time. Okay, so real time examples only I have taken and I have just explained for you. So that's why, and some of the case studies also we will just discuss some. Okay, so that's why to continue, no. So these are all the basic topics we have to be thorough. Okay, so that's why it is very very important. Yeah. Uh, so my screen is visible for you, right? So can anybody tell me what is this income statement? So I think you have already learnt in your academics, like in your BCom or else in masters also. I think you have about the concept of income statement, preparation of the income statement. So can anybody tell me about the thing like what is income statement? So, what is this income? So, income is nothing but whatever the amount which you receive, right? So, whatever the amount which you receive, so that is called as the income, right? So, now here, when are we going to receive the income? So, income in the sense like if you just sell the product, okay? If you just first you have to purchase the product. Say for example, why do we do the business? So we will be doing the business because we wanted to make the profit. Okay, so everybody will be behind of profit itself. Okay, so that is nothing but income. Okay, so income statement. State for that particular thing on 31st March we are going to prepare this income statement. So because to find out the whether the business is making profit or loss. Okay, so profit is nothing but the income itself. Okay, income is profit. So that means, see, now everybody, say for example, if I purchase 10 a pen for 10 rupees, okay, a pen for 10 rupees. Okay, so then if you are paying the if you are selling that particular 10 rupees for 12 rupees. Okay, so that pen whichever you have purchased for 10 rupees and you are now selling the same pen for 12 rupees, how much is the profit?
2 rupees.
2 rupees. So 2 rupees is the profit. So now to calculate that particular 2 rupees only, we have to prepare the income statement. So actually, if we just sell that pen to 12 rupees, the 2 rupees is the complete 2 rupees is for us? No. Okay, so we have to pay taxes, we have to pay interest, we have to bear some expenses. Okay, so we have to do all the expenses in our business. Okay, so that's why after deducting all the expenses, after deducting all the things, okay, all the charges, all the interest, all the taxes, expenses, everything, after deducting all those things, what is the profit which is remained for us? Okay, what is the profit that I can enjoy? Okay, so that particular profit is called as, I mean, to estimate that particular profit value, so we used to prepare this income statement. Okay. Any doubts? So this is the format of the income statement. So that means a revenue. Okay, so revenue is nothing but the sales, okay, minus COGS. So what is COGS? Can anyone tell me?
Cost of goods sold.
Yes, very good. What is that cost of goods sold? Cost of goods sold in the sense, what is the particular price or cost which has been incurred for the goods which I have sold. Okay, say for example, 20 products I have sold. Okay, so 20 products which I have sold, what is the cost incurred for us? Okay, so we have given 1,000 rupees for 20 pens, okay, and we are selling it for the same 20 pens, we are selling it for uh, 2,000 rupees. Okay, so that is about cost of goods sold. What is the particular product price which it has been cost? Okay, so which we, while we are purchasing the product, how much it has been cost, so that is called as cost of goods sold. So then minus gross profit. Okay, so minus gross profit. So sorry, revenue minus cost of goods sold, you'll be getting the gross profit. Okay, so then again minus operating expenses. Okay, minus operating expenses, you'll be getting the answer here as EBITDA. Okay, I'll just explain you what are all the expenses will come under operating expenses. Okay, so then what is this EBITDA? So EBITDA is nothing but earnings before interest, tax, depreciation and amortization. Okay, so again we have to do minus. Okay, so minus depreciation and amortization, we'll be getting the answer here as EBIT. So that means earnings before interest and taxes. So then again minus minus interest expenses, non operating expense that includes interest. Okay, so then we'll be getting the answer here as earnings before taxes. Okay, so then again minus tax, we'll be getting earnings after tax, or the, we can say that as a profit after tax, like that. Understood? So I want you to copy this format. So you just take down this, you put the heading as income statement and you just copy this format. Okay, so done. This is the format of the income statement. So that means so at the last we'll be getting the profit after tax, or we can also say that earnings after tax. So whatever the value we will be getting like after tax, so this particular earnings we used to say as the real profit, or the um, actual profit where we can use it for our purpose, like that. Okay, so done writing this. So I want you to write this format. Okay, so then shall I move on to the next one? So next it is about like a gross profit, how to calculate the gross profit. Revenue minus cost of goods sold. Okay, revenue, that means the sales. So sales minus cost of goods sold, you'll be getting the answer here as the gross profit. Okay, so then after that you will be getting the gross profit margin, so profit percentage. So that means revenue minus cost of goods sold, then you will be getting the gross profit. Gross profit percentage is equal to gross profit divided by net sales into 100. Okay, that is your gross profit percentage formula calculation. So you just take down this example. So for example, so a company earned 50 lakhs in revenue. Okay, so by selling shoes, and the shoes created is 20 lakhs of labor and materials cost to produce. Calculate gross profit and gross profit margin. So how to calculate this? So you just tell me the gross profit is how much? So gross profit is equal to revenue minus the cost of goods sold. Okay. So you just do that and tell me the answer. Done. What is the gross profit here? So 50 lakhs minus 20 lakh. Okay. So that means this is about the gross profit. Okay, so this is about the net sales. So that means 50 lakhs is called as the, I mean, it is the net sales. So minus the cost of goods sold. So that means 20 lakhs. Okay, so that means 50 lakhs minus 20 lakhs, you will be getting the answer here as 30 lakhs as the gross profit. Okay, so 30 lakhs as the gross profit. And how to calculate this gross profit margin? So gross profit margin is nothing but, so gross profit divided by net sales. So what is the sales? So gross profit is nothing but 30 lakhs. 30 lakhs divided by sales means 50 lakhs into 100. So then you will be getting the answer here as 0.6. So that means the answer will be 60%. Okay, so the answer will be 60%. So just take down this. You have done already. Okay, so then the next thing is about, say, the conclusion. How do this works? So this means that the direct cost of producing the product that the company sells consume 40% of its revenue. Okay, so 40% of its revenue, and that it has 60% of its revenue to cover indirect cost and create profit for the owners. Okay, so this is about the conclusion. So that means 60% we are getting the profit. Okay, so if we just do like this, okay, if we just sell this, so this is about the conclusion. Okay, so this one, like this only you have to tell or give the report as a financial analyst. Understood? Any doubts in this? Okay, so then we will move on to the next topic. So how to improve your gross profit? So how the improving the gross profit is, like you can increase the prices. Okay, you can increase the prices. So then you have to reduce the product cost. So then you have to analyze the promotions. So then implement your dynamic pricing. Okay, so that is about like a method of improving your gross profit. Okay, improving your gross profit. See now, after that we are getting the opex. So after the topic of this gross profit, we'll be getting this opex. What is this opex? So opex stands for operating expenses. Okay, operating expenses means what are all the expenses? So here, revenue minus cost of goods sold. Okay, revenue minus cost of goods sold, you'll be getting the gross profit, right? So gross profit minus expenses, gross profit minus operating expenses, you will be getting the answer here as operating income. Okay, operating income. So this is also called as EBITDA. EBITDA is nothing but earnings before interest, tax, depreciation, and amortization. Understanding? Any doubts here? So if you are having any doubts, you can put it in the chat box. or you can just ask me. Okay. So then operating expenses components. So what are all the operating expenses here? So that means accounting fees, advertising and marketing, insurance. Okay. So then legal fees, license fees. Okay. So office supplies, maintenance and repairs, rent. Okay. So then salaries and wages, then salaries and wages other than direct labor for production employees, property taxes, so then travel, so then utilities, so then vehicle expenses. Okay, so these are all the operating expenses we used to uh, uh, consider. Okay, these are all called as the operating expenses. So you just take down these things, write down. So done. You have written, no? Any doubts in this operating expenses?
No doubts, ma'am.
Okay. So then after that, how to calculate this? Okay. So calculate the operating expenses. So here you have the example. So that means to illustrate the financial statements for Carlos Craft Cottage looked like this in 2019. They pay 20,000 for rent and 40,000 for salary and 10,000 for legal fees. Find the operating income. So that means you have the sales as 2 lakh and cost of goods sold is 50,000. So how much? So revenue is nothing but sales. So sales is 2 lakh. So 2 lakh minus cost of goods sold. So that means 50,000. Okay, so you'll be getting 1 lakh 50,000 as the gross profit. Okay, understanding? So again I will tell you, so sales or the revenues it is 2 lakh. Okay, so sales or revenues it is 2 lakh, so minus cost of goods sold, so cost of goods sold is 50,000, so 2 lakh minus 50,000 will come into 1 lakh 50,000, so that is called as the gross profit. Okay, so gross profit minus operating expenses, so 1 lakh 50,000 minus this 20,000. Okay, do it girls. So 1 lakh 50,000 minus 20 will become 1 lakh 30. 1 lakh 30 minus 40 will come into 90. 90 minus 10. So you'll be getting the operating income as 70,000. Sorry, 80,000, like that. See this operating expenses revenue. Sorry, or yes. So that means the margin. So how can you find out the margin here? So as you have, we have seen in the gross profit percentage margin. So in the same way, you have the operating expenses margin also. Okay, so operating income divided by sales revenue. Okay, so divided by sales revenue into 100, so will become your the operating expenses margin here, like that. So Carly is spending 60 cents of every dollar she earns on the day to day cost or of running her business. Whether that result is good or bad depends on the norm for her industry. So you just do it, girls. You have done about this operating income. This is your sum. Okay, you have to do it. You have done this?
We are doing it, ma'am.
Yeah. Okay. Okay, so done, no? So then after that, so we are having the next concept. So that's nothing but EBITDA. Okay, so EBITDA is nothing but earnings before interest, tax, depreciation, and amortization. Take down this one. Okay, so then earnings before interest, tax, depreciation, and amortization. Can anyone tell me what is depreciation?
Decrease in value of asset due to the usage.
Correct, correct. So decrease in the value of asset. Right. So then what is amortization?
Amortization is similar to depreciation, but it is applicable on intangible assets.
Yeah, very good. Correct. So that means the depreciation will be applicable only for the fixed assets. So then amortization will be applicable for the intangible assets. So can you just name any intangible assets?
Goodwill, patent,
Ah,
know-how.
correct. Very good. Goodwill, patents, trademarks, copyrights. So all those are intangible assets. So now this is at the end of the year, Jack earned 1 lakh. Okay, so dollar 1 lakh in total revenues and had the following expenses. Okay, salaries 25,000, rent 10,000. So what are all these things? So these are all the operating expenses. Okay, salaries 25,000, rent 10,000, utilities 4,000, cost of goods sold 35,000, interest 5,000, depreciation 15,000, taxes will be 3,000. So Jack's net income at the end of the year equals 3,000. So Jack's EBITDA and EBITDA margin you have to find out. Will you do this? Okay, so done. So what is this EBITDA margin? So EBITDA margin is whatever the EBIT we got divided by sales revenue. Okay, so sales revenue is how much? Sales revenue is 1 lakh. Okay, so that is 26,000 divided by 1 lakh. So we will be getting here as 26%. So that means 0.00026 you will be getting that month. You have to multiply it by 100 like that. So then depreciation and amortization on the income statement. So that means the straight line depreciation formula for an asset is as follows. So you just take down this formula. So annual depreciation expense is equal to cost of the asset minus salvage value. Okay, cost of the asset minus salvage value divided by useful life of the asset. Okay, useful life of the asset. So salvage value is the value of the asset at the end of its useful life. Okay, so that is about the formula. So if you are having the cost of the asset is 1 lakh, so then minus the salvage value is nothing. Okay, so salvage value is 0. So then the life of the asset will be approximately 10 years. So then 1 lakh divided by 10. So that means 10,000 rupees will be your depreciation expense like that. So then example, company A purchases a machine for 1 lakh with an estimated salvage value of 20,000 and a useful life of 5 years. So will you do this? Okay. So do this 1 lakh. So the 1 lakh minus salvage value. So that means the cost of the asset is 1 lakh minus salvage value is 20,000. Okay. So that means 80,000. 80,000 divided by 5. Done. The salvage value you have to minus and divide it by 5. You got this? So here only you have the answer also. Okay, so 80,000 divided by 5. So you'll be getting the answer as 16,000 annual depreciation amount. Any doubts? So like this is your straight line depreciation method. So then after that, so EBITDA minus DA, D and A. So if you just deduct depreciation and amortization, you'll be getting the EBIT. So that means earnings before interest and tax. Okay, like that. See, what is this? Then the example 2. Company A purchases a machine for 1 lakh with an estimated salvage value of 20,000. Okay, so done, no? Understood? Any doubts in this? So then the next one is about like EBIT example. So we have a company named ABC, ABC and company having revenue of 4,000, COGS of 1,500, and operating expenses of 200. Find EBIT. Okay, so EBIT. So then you just do it and just tell me like what is this EBIT? Then we will start with the practical examples, exercises we will start. Done. So then example 2 you do. So we have the following data. So sales is 5 million dollars. Variable cost it is 12% of sales. So then fixed cost is 2 lakh. Okay, so 2 lakh dollars. So then interest expense. Okay, so what is this interest expense? So you just do this. So interest expenses, debt into interest rate. So debt is nothing but the loans which you have received. So then the interest you have to pay monthly, right? So that is like interest expense. So how do you calculate? So loan amount into interest rate, you will be getting the interest expense. So you just do this 1 lakh 25 and agrees to pay interest amount on from February 20th. So the loan indicates interest is 2% per month on the loan balance. So the interest expense for month of January shall be, so 1 lakh 25,000 into 2%. So you just do it and tell me how much is the interest expense.
Ma'am, is the answer 2500?
Okay. Okay then. Okay. So then 1,25,000 into 2% you have done, right? So then you'll be getting the answer. So that is your interest expense. So now what will be the interest? So we can just open that Excel. So and then we can do this here. 1,25,000 into 2%. Yeah, so 2,500 will be the answer. So that means the interest expenses here. So now, okay, so after deducting the interest expenses, so we will be getting earnings before taxes. So that means EBT, earnings before taxes. Okay, so then we have to pay taxes for the government also, right? So then what is this income tax expenses? The taxable income into tax rate. That means say for example whatever the EBIT you got. Okay, so that means the profit after tax you will be getting. That means the after receiving the after calculating this, so you'll be getting the answer as PAT or EAT, like that. Yes. So now let us start the exercises regarding the income statement. Any doubts in these things which I have shown you? No doubts? So I'll just share you this file. Okay, so this file is regarding the income statement. Income statement. Okay, so exercise. So I'll just share you. Okay, so this file. So you can just go through this. Okay. So I'll just show you how to do this, and then I will send you the. I mean, I'll share you the file. Okay. So now the first one we will just read it out. So I'll just read it out. So company ABC, where number of pens sold was 800 numbers at a price of rupees 200. Okay. Initially, the company ABC had 500 pens but purchased at a price of rupees 50. Additional of 400 more pens at a price of rupees 50 to execute the order. The company ABC, however, incurred expenses like rent at the rate of rupees 2000, salary at 5000, marketing expenses rupees 3500. To run the business, ABC company purchased a car worth 2 lakh through loan at a rate of 8% and expected life of the car is 10 years. Tax to be paid is 30%. Find the net income. So let us do this. Okay. So what is the sales here? So the sales is nothing but selling price into number of goods sold. Okay, sales into number of goods sold. What is the sales? So sales is nothing but the 800 pieces, right? So what is the selling price? That means 200. Okay, at a price of 200 each. So 200 into 800. So that means multiplication you have to do it here. Okay, say now is equal to, okay, 800 into 200, okay, is equal to 800 into 200. So that means 800 pens we have sold at the cost of, I mean at the price of 200 per pen. Okay, so now how much is the value? 1,60,000. Okay, 1,60,000 rupees. Okay, so initially the company ABC had 500 pens but purchased at a price of rupees 50. So now for example, we will be just purchasing the particular product at the cost of 10 rupees, and we are going to sell the same pen at the price of 12 rupees, as I told you before. Okay, so in the same way, here in this case study, so we have purchased a pen, each pen for 50 rupees, and we are selling the same pen for 200 rupees. Okay, so that means, so what is the cost price? So the cost price will be considered as 50 rupees, okay, into number of goods sold. Okay, number of goods sold. So number of goods sold is how much? How many pens we have sold?
800.
Ha. So 800 pens we have sold here. Right. So that's why is equal to, okay, is equal to cost price. So cost price is nothing but 50. Okay. So 50 into number of goods sold. So that means 80, sorry, 800. Okay. 800. So and then press enter. See, now we will be getting the answer as, I mean, of the COGS as 40,000 rupees. Okay, so 40,000 rupees. Say now the gross profit. So what is this gross profit? So sales minus COGS, we will be getting the answer as gross profit here, right? Say now is equal to, so sales is 1,60,000 minus COGS is 40,000. Okay, cost of goods sold is 40,000. So and then press enter. So we'll be getting the answer as the gross profit as 1,20,000, like that. So then here, what are all the operating expenses? So say the next part we will just study additional of 400 more pens at a price of rupees 50 to execute the order. Okay, so now the company ABC, however, incurred expenses like rent at the rate of rupees 2000, salary at the rate of rupees 5000, marketing expenses rupees 3000. Okay, so what is this rent? So rent is at 2000 rupees. Okay, then salary is for 5000 rupees. 1 minute. Yeah, sorry. So here we are having the salary of 5,000 rupees. That is about the expenses. So then this is about marketing expense. So marketing expense is of 3,000 rupees. Okay. See now here total operating expenses. So we have to add what are all the operating expenses we have. Everything we have to add it here. So what is the shortcut key for sum function?
Alt is equals to.
Very good. So now alt is equal to, so and then press enter. See now the total operating expenses will be 10,000 rupees. Okay. So now EBITDA. Okay. So sorry, EBITDA is nothing but gross profit minus total operating expenses. You'll be getting the answer here as EBITDA. So now is equal to, what is the gross profit? 1,20,000 minus total operating expenses will be 10,000. Okay. So now press enter. See now you'll be getting the answer here as 1,10,000 rupees. Like that. So now finally EBITDA is 1,10,000. Like that. So now what is this depreciation and amortization? So here they have mentioned anything. So to run this business, ABC company purchased a car worth 2 lakh. Okay. So to run this business only, ABC company purchased a car. Okay. So worth 2 lakh through loan at the rate of 8%. And expected life of the car is 10 years. Okay. So here how will you calculate the depreciation? So the value of that particular asset, okay, so divided by life of the particular asset here, right? So that's why is equal to what is that value? So the value is 2 lakh rupees. Okay, value of the car. Okay, so value of the car is 2 lakh rupees. So now divided by 10, number of years is 10. Okay, so now enter. So now we'll be getting the answer here as 20,000 rupees. So 20,000 is the depreciation value. So now here EBIT. What is this EBIT? So now here is equal to EBITDA. So that means 1,10,000. Okay. So then minus depreciation and amortization. That means the 20,000 rupees. So and then press enter. See now we'll be getting the answer here as EBIT. That means 90,000 rupees. EBIT means, so after deducting the depreciation and amortization, we'll be getting the EBIT value as 90,000. Understanding? Any doubts? Okay, so the next step is about interest expenses. How to calculate this interest expense? Can anybody tell me? So, what is the value I can put here?
2 lakh into 8%.
Very good. So, is equal to 2 lakhs. Okay, 2 lakhs into rate of interest is 8%. Okay, rate of interest is 8%. So now again press enter. So now we'll be getting the answer as 16,000 as the interest expenses. Okay, so then after this, so we'll be getting the EBT. So when we will be getting EBT, so means we have to deduct here. Okay, so EBIT minus interest will be getting the answer as EBT here. So that's why is equal to EBIT. So that means 90,000 minus interest expense will be 16,000. So and then press enter. So now we'll be getting the answer here as EBT as 74,000. So then after that the tax has to be calculated. Okay, so the tax is 30%. Okay, so here tax to be paid is 30%. So they have given us find the net income. So that means the 30% in the sense is equal to 74,000. Okay, so we have to calculate the tax on EBT, right? So EBT 74,000 into how much is the tax? So that means the 30%. Okay, so 30% is the tax. So and then press enter. See, now we'll be getting the answer here as 22,200. Okay, so what is the profit after tax here? Is equal to 74,000 minus tax. Okay, so EBT minus tax. So we'll be getting the answer here as 51,800. Okay, so this is our net income or the profit after tax, or we can also call it as earnings after tax. Understood? No? Any doubts in this exercise? Or you want me to explain any step? Or you have understood all the steps? Clear everything?
No doubts, ma'am.
Okay. Okay, fine then. So we will just move to the next exercise. So you are having so many exercises here. So we will just solve one by one. So you just read this. Prepare a multi-step income statement for the clothing retailer for the year December 31st, 2013. Okay, so now here they have given as a beginning inventory. Okay, so beginning inventory is 2,56,000, ending inventory 2,48,000, material purchase 24,25,000, sales 32,10,000, R&D expense 35,000, repairs and maintenance it is 22,000. Okay, so then salary is 2,40,000, taxes 51,000, depreciation 78,000. So then lease payments 52,000. Okay, so interest expense 64 and advertising expenses is 68,000. So now how to do this? So first, what is the format of the income statement? First we have to put the sales here. Okay, so what is the sales value? So sales is sales is 32 lakh 10,000. Okay, so now don't put the value here like is equal to or else like 3210,000. So don't type here. So you just put is equal to and you just select the cell address. So automatically you will be getting the value here like that. So next it is COGS, that means the cost of goods sold. So how to calculate this cost of goods sold? In the previous statement we were having directly as how much we have sold and how much we have purchased, each and every detail we were having. But in this statement number 2 we are not having how much we have sold and what cost price or the selling price we have sold or purchased. Not we are not having any details here. So at that time how to calculate this cost of goods sold? So there will be a formula as opening stock plus purchases minus closing stock. Okay, so that will be your formula. Okay, opening stock plus purchases minus closing stock will be your formula. So in the same way we will just put here. So here they have not given you directly. So inventory is nothing but the stock. Beginning inventory is nothing but opening stock. Okay. Material purchase is nothing but purchase. So then closing stock is nothing but ending inventory. Okay, ending inventory. So that's why is equal to opening stock. So opening stock is nothing but beginning inventory. So 2,56,000 plus purchases. So put plus material purchase, that means 25,000. Okay, minus closing stock. What is the ending inventory? 248,000. Okay, so now press enter. So now here we'll be getting the answer as 24,33,000. Okay, so now we'll be getting the answer here as 24,33,000. Any doubts in this step? So now again, how to calculate this gross profit? Sales minus COGS, right? So now is equal to sales you select and then minus COGS you select. Okay, sales minus COGS. So and then press enter. See, now we'll be getting the answer here as 777,000. That means 7,77,000 will be our gross profit. Any doubts still here, guys? So now here, the next step is about OPEX. That means operating expenses. Okay, operating expenses. So that means R&D expense. What is this R&D expense? So is equal to, so here we have R&D expenses 35,000. So yeah, just put enter. So now repairs and maintenance is equal to, you select this 22,000 as the repairs and maintenance here. So and then press enter. So the next step is about the salaries. So salaries are the expenses. Okay, operating expenses. 1 minute. Okay, so now here you are having the salaries here. Okay, so salaries are like is equal to, so you put the salary as 2,40,000. So and then press enter. Okay, so then next expense is about lease payments. So that is also directly it is available. Press enter. So again you are having advertising expenses. So is equal to, so you just come down and select here as advertising expenses. So and then press enter. See, now we'll be getting the answer. I mean total operating expenses we have to select here. So that means, so how to calculate the total operating expenses? So we have to use the shortcut key for sum, right? Auto sum. So now alt is equal to So and then press enter. So now total operating expenses you will be getting here as 4,17,000. Okay. So now here EBITDA. EBITDA is nothing but so is equal to gross profit. Okay. So gross profit minus total operating expenses if you do. So and then if you press enter, so you'll be getting the answer here as 3,60,000. So now can anyone tell me what is the depreciation value? The depreciation value will be how much?
78,000.
78,000 exactly. So now is equal to, so again if you select this 78,000, so that means the B11 cell it will got selected. So and then press enter. See now we'll be getting the answer here as depreciation and amortization. So now here EBITDA, so that means EBITDA minus depreciation and amortization if you do, so we'll be getting the answer as EBIT. Okay, so that's why is equal to, okay, so 3,60,000 minus depreciation and amortization. Okay, so minus depreciation and amortization. So now we'll be getting the answer here as 2,82,000. Okay, 2,82,000. So what is the interest? What is the interest expense?
64,000, ma'am.
Yeah, very good. So now is equal to, you select the cell here as a B13. So where you are having the interest value directly. So and then press enter. Say now you'll be getting 64,000. So then what is this EBT? So EBT is nothing but you have to subtract the EBIT minus interest. Okay, so EBIT I'm selecting and then minus interest I'm selecting. So and then press enter. So we'll be getting the answer here as EBT. So that means earnings before tax. So taxes is equal to, so taxes are 51,000. Okay, so I'm selecting the cell as B10 cell. So and then press enter. Say now here we are getting the tax amount directly as 51,000. So and then profit after tax. So what is this profit after tax? So we have to select this EBT. Okay, EBT minus tax. Okay, so now we will be getting the answer here as 1,67,000. So the final profit, that means see, you just see the gross profit. So the gross profit we were having was 7,77,000, but after expenses, after interest, after depreciation, so now the profit has been remaining 1,67,000. So that is about the thing. Okay, so I'll just share you this file, you can just go through. So just open it and try it out, guys. So try it out in between. If you are having any doubts, so you can put it in the chat box or you can just ask me. So done everyone? Any doubts in this? So shall we move on to the third one? Third exercise. So that means income statement number 3. Okay. So here they have given as revenue, that means increment by 8% yearly. So revenue is nothing but the sales. So sales first year they have given you. Okay. So that means 900. Okay, 900 is the sales. So 80% it has been increasing. Sorry, 8% it has been increasing yearly. That means how do you calculate here? So now is equal to, okay, so 900. Okay, open the bracket, first you do 900 into, okay, 8%. Okay, plus this 900. Okay, so then press enter. See, now you'll be getting the answer as 972. Okay, the next year. So in the same way you can just drag it over here. So automatically you will be getting like that. Okay, H2 I2 it will be selected. So or else you can follow the other way, other method also. So how do you do that? Is equal to this 900. Okay, so then into, okay, 900 into, so open the bracket. So then 1 plus 8%. Okay, 1 plus 8%. Okay, so 1 plus 8%. So and then close the bracket. Okay, close the bracket and then press enter. So now also you'll be getting 972 only as the answer. Okay, so in the same way, so you have to drag it over here. So automatically you will be getting the answer. So you just take down, the method. So that means you can calculate by two methods. So that means 900 into, okay, 900 into, so no, open the bracket. Okay, so 900 into 8% plus 900. Okay, so that is the first method of calculating the increment by yearly. So then the second method is nothing but 900 into, open the bracket, 1 plus 8%. Okay, 1 plus 8%. So now you will be getting the answer here as 972. So in the same way you just drag it over here like that. So then a COGS. So COGS is nothing but, so they have given you, that means the first year as the 350, that means increment by 12% yearly. So that means is equal to 350 into, okay, 1 plus, okay, 1 plus 12%. So again close the bracket and then enter. See, now you'll be getting the answer here as 392. Okay, so now again you just drag it over here, so you'll be getting the same answer. Okay, so now after that you have to come to this operating, total operating expenses. So you have to do it, you have to calculate it. Alt is equal to, okay, so then again press enter. So the total operating expenses, you'll be getting the answer here. Okay, then what is this EBITDA? So EBITDA is nothing but gross profit minus total operating expenses will comes to the EBITDA. So that means is equal to gross profit. Okay, so first we have to calculate the gross profit, right? So that means, so sales minus, okay, so this 900, okay, sales minus COGS. So and then press enter. See, now we'll be getting the answer here as the gross profit. Okay, so now this is equal to, so this gross profit, okay, minus total operating expenses. So you'll be getting the answer here as 41. Okay. So again you have to drag it over here. Yes. So after that, so you'll be getting the 152 as the depreciation. So that means EBIT is nothing but what? So you have to do this. So is equal to total operating expenses. Okay. Sorry. EBIT. Okay. So minus depreciation. Okay. So 258. So in the same way, you just drag it for the rest. And for the PBT, so that means profit before tax, so again is equal to EBIT, okay, minus interest, okay, minus interest. So now we'll be getting the answer here as 195. So in the same way you can just drag it for the rest. Okay, so next it is about the taxation. Current tax is at 35%. Okay, so that means for this PBT is equal to 195 into, okay, 35% is the tax, 68 rupees. Okay, 68 rupees. In the same way you just drag it for the rest. Okay, so then what is this profit after tax is equal to PBT minus this tax. So this is the way you have to calculate the profit after tax. Any doubts in this third one? Okay. Any doubts? Okay, so then you practice these things. Okay, so we will just, I think tomorrow is holiday on account of festival. Okay, so then, so day after tomorrow, your next class is on Wednesday. Okay, so practice well. If you have any doubts, ask me. Okay, bye.
Thank you, ma'am.